Mark, great to see you. You say June 16th was the low, and it will be the low for the year. What about that? Do you think we've now turned a corner and we'll see a tougher second half?
Well, I do think that June 16th was the low, but that doesn't mean that happy days are here again. I expect a lot of market chop. We've got a real natural gas problem over in Europe. The tensions with Russia and Ukraine could spill over to the energy market. China's slowdown is concerning. The dollar strength here could hurt earnings. There's a lot of headwinds and a lot of warning signs. But when we look at the inflation components, they are coming down. Corn is down, lumber's down over 60%. So we see inflation, peak inflation behind us. And that's why I think it's going to be choppy. But eventually the inflation gets behind us and the market works out some of these worries.
Yeah, I mean, I think it is also partly the macro story that things have slowed so much. We are looking ahead this morning. We've got Macy's earnings out in less than an hour. We'll get those numbers coming up. And we've got the Jackson Hole meeting at the end of the week. What are you expecting from the Federal Reserve in terms of what we'll hear from Chair Powell on Friday and how aggressive they'll be in this fight on inflation? Everybody's wondering if we're going to get 50 basis points in September or 75 basis points. And perhaps the Macy's earnings this morning also educate us on how strong the consumer is.
Well, you're absolutely right. The Fed Jackson Hole meeting is the main event. And I think Jerome Powell was misinterpreted. Markets wanted to hear what it wanted to hear, and they thought they heard him say he was going to pull back a little. Every Fed governor since then went and pulled back whatever sentiment was misconveyed in that meeting. The Fed has inflation still as public enemy number one. It's working. I just mentioned some declines in commodity prices. We saw a slight dip from June to July in inflation, and this is what they're going to fight to continue to do. They still have 2% as their target. 8.5% inflation where we are now is a long way from 2%. So look for Jackson Hole to continue to hear the Fed say, we're going to slow down this economy. Speaking of the consumer, retail earnings, you're going to see a strong consumer. And that is what the Fed is actually fighting. The Fed can control the housing, the autos, the interest sensitive. And I think eventually retail is going to come into those crosshairs. But for now, it looks like the consumer has helped earnings. But I think that's going to be more rear view mirror. And third quarter, what the Fed's doing is going to slow things down.
Yeah, I mean, look, the consumer has been strong because they've got money in the bank. Their savings is strong. But recently we've seen that they're cutting into savings to afford this inflation. And nowhere is that more apparent than the home market. 21% of home sales across the country actually dropped below their asking prices in July. We saw a real weakening in the housing market as mortgage rates spiked. We're looking at new home sales out this morning. We'll get the numbers at 10 a.m. Eastern. We'll get pending home sales out on Thursday, Mark. I know you think that autos and housing will be hit the hardest as this economy slows and the Federal Reserve slams the brakes. What are you expecting in terms of the housing market?
Well, I think we're seeing the beginning of it. And when I'm inside the Beltway here in D.C., which is usually a very strong housing market, and when you see asking prices come down, negotiations returning, you know that something is happening in the housing market in areas that aren't nearly as strong. So I think what the Fed is doing, and it's a little bit unfair that their tools really impact housing and autos when we have energy prices a main event problem, and we have food prices a main event problem. But the Fed can only deal with what it can deal with. And we think that those sectors, especially housing, and then the related industry, this is why lumber is coming down. This is why inflation will come down, because the component prices in a slowing housing market will then put a drag on the economy. That's what the stock market thought it heard in July, that if inflation is coming down and the Fed is actually slowing down the economy, then we'll have a benign interest rate environment, which is good for stocks. I think they were just a bit premature. Yeah, I mean, but once the go on.
Exactly. I mean, a bit mature. I mean, it was incredible to me that as soon as the Fed starts raising interest rates, the betting starts on Wall Street about when they're going to start cutting rates. I mean, come on.
That's right. They're not going to cut. They're not going to cut. Not after this. Not after being too low for too long.